Hi everyone, it is Evan here from theTradeRisk.com, and in this video we're going to be discussing cryptocurrency, how to get started trading and investing in this space. Now, if you're finding this video just natively on YouTube, we do have a blog post out covering everything we're going to discuss in this video. So if you'd rather just read the article, you can click the link that should be appearing in the top right-hand corner of your screen right now. That'll have everything we're going to walk through here with the links and everything associated in this video. Also, if you click on the description of this video right down below on this YouTube channel, you can find all of the sections and timestamps of what we're going to be talking about in this video. So if you are familiar with some of the basics, if you want to jump around, then I encourage you to do so, because this will probably be a pretty long video. We're going to try and cover lots of different topics just to really start from the beginning and kind of leave you with some actionable points to sort of get out there and try to get involved in the space. Or maybe you decide after listening to everything we have to say that this is not something that's cut out for you, or maybe not yet given the stage of cryptocurrency, and that is entirely up for you to decide. And closely related to that is the usual disclaimer that nothing here is financial advice or should be considered a recommendation to buy or trade or invest in anything. What we're going to be talking about here are the pros and cons. We're going to outline the opportunity, the risks. So ultimately, do your own due diligence. It's up to you based on your risk tolerance, your investment objectives, so on and so forth, to come to basically come out to a decision that makes sense for you. So I just encourage you to keep that in mind. And I think that is everything I wanted to say before we kicked into the slide deck. My experience in this space dates back to 2012. That's when I started trading and investing in Bitcoin and researching the technology. And since that point, started off, basically exclusively with Bitcoin, and we've gradually sort of emerged into more of altcoins and trading and investing in this space. So essentially, since 2012, I've been on and off trading and investing, researching in this space. And hopefully I can bring some of that knowledge and some insights to you if you're just getting started now. So with that, let's jump into the slide deck here. And we're going to start with a few definitions, just a few terms. So if you're brand new to the space, here is a quick kind of catch up to some of the important terms I think that are worth knowing. And remember, this video is really meant to get into the trading and investing, the opportunity, risks, and how to do that. So we're not going to go too deep into any of the underlying technology. We're not going to, decide or give any opinions on which cryptocurrency is going to be the best long-term investment, or what is the what are the prospects of certain types of coins out there. We're going to leave that to another video, or for you to decide, and really just kind of touch at a high level some of the definitions and focus more on the trading side, and investing. So let's start it off from the top here. What is cryptocurrency? At a high level, cryptocurrency is digital money created from code. Now, Bitcoin was the first cryptocurrency created back in 2009. Technically, maybe late 2008 is when the project kind of finished up, but we'll call it 2009. And Bitcoin is commonly referred to as the Internet of Money. Now, since that point, since 2009, there have been more cryptocurrencies that have come to market. These are referred to as altcoins. And altcoins, if you hear that term, are basically just all cryptocurrencies that are not Bitcoin. So at this point, we have hundreds of different cryptocurrencies, and they all have a slightly different flavor, slightly different take, perhaps use case of why they were developed, and maybe some of the underlying technology behind it. We'll touch on a few of those examples in just a little bit, but again, we're not going to go too deep into that end for the scope of this video. So that's the high-level definition of cryptocurrency. Let's look at something a little more granular, just to get a better understanding of really what cryptocurrency is. And this is a slightly more rigorous definition. So a cryptocurrency is a digital currency that is created and managed through the use of advanced encryption techniques known as cryptography. Now, it is cryptography that is the important word here in this definition, and that is what is responsible for all of these wonderful properties that we appreciate about cryptocurrency, and it really enables this whole thing to sort of work. Cryptography is, at a very high level, very clever mathematics, and let's get into some of the more specific definitions and applications here of how cryptography relates to cryptocurrency. So at a high level, cryptography defined as the science concerned with the study of secret communication. Now, that translates into cryptocurrency in a few different fashions. I have 4 different sort of properties that cryptography really solves for, and you could probably parse it into more or have more than just these 4, but I think there's 4 to really pay attention to. The first proves the identity of transactions. Second, keeps the integrity of the ledger, so ledger commonly referred to or also known as the blockchain, authenticates transactions, and maintains the privacy of transactions. Now, I sort of purposely do not want to go into any one of these because we could spend an hour basically just diving into the mathematics and understanding of cryptography and how this really works. And I'm absolutely no expert. I've done some research in this space, so I am familiar with how some of this works, but I am by no means an expert. I will link you to a great video, a great secondary video here that you can dive into the math portion of this to really get a better understanding if this is something that interests you. But again, for the scope of this video, I really don't want to take up too much more of our time here, but just understand that cryptography, again, is really the magic behind basically all of these cryptocurrencies and how this works. And again, if you were to level that up one more time, it's very just clever mathematics, okay? I think that's an easy way to think about it. Now, another important part here is with cryptography, this gives us this decentralized notion to say, look, math is sort of solving all of this for us. There's no government here. There's no bank that is facilitating or putting their stamp of approval on person A sending person B money. This is all happening and figured out in a decentralized, sort of trustless network. And the risks of that for cryptography, or one of the important things to note here, is that you are your own bank. And what that basically means is everyone has their own private keys, which is another fancy word for passwords. And if you lose your passwords, your funds can be gone forever. There's no one to call to say, hey, I lost my password, what is it? If you have a secret key, if you're controlling your own private keys, which again, we haven't talked about yet, but I highly recommend if you're going to be investing in this space, then you need to make sure that you are very diligent with where you keep your passwords, your private keys, and how you protect them. And we'll talk more about that in a little bit, but you are your own bank. And I think that is something that's very different and very uncomfortable for some people. And again, that might speak to some of the opportunity in this space, just given we don't have a very clean sort of framework to handle that at this point. And again, I'm jumping ahead a little bit. So that's cryptography, very important piece. I'm going to, again, link here in the description of this video if you want to learn more about it. Let's talk a little bit more about cryptocurrency, and then we'll finally get into some of the trading and investing aspects to here in just a little bit. Now, to sort of wrap this up on cryptocurrencies, but something I think is pretty important, many of the new altcoins that have come to market since Bitcoin serve as more than just a medium of exchange. So for Bitcoin, for example, it is considered the internet of money. It is easy for Sally to send Bob $100 and vice versa and become a digital currency very similar to we would exchange, money with PayPal or some type of online service. These other altcoins that have come up since Bitcoin really have more of a use case they're trying to solve for than just a payment system from person A to person B. And I'm going to give you this definition here of Ethereum, which is a very popular sort of secondary cryptocurrency that has surfaced in the past several years now. And this is a heavy definition. Again, we're not going to go too deep into it, but I think the point will become clear at the end of this slide. Ethereum is a full Turing-complete blockchain that functions as an open platform where decentralized applications and contracts can be implemented. That is what Ethereum is. Now, there's nothing there that says this is going to be, sort of the new internet of money. This is going to be the way Bob can send Sally money online. This is something entirely different, which Ethereum is setting out to achieve and accomplish with its network. So the point here is that cryptocurrencies, just like Ether, and Ether is the actual cryptographic token that fuels the Ethereum network. So cryptocurrencies, just like Ether, have a unique network in which their specific currency was created to incentivize. Ether was created for users to be able to pay for that decentralized computational power in the cloud of Ethereum network. Okay, if that makes sense. And again, we're going sort of deep here. The point is that if you start to wrap your head around, or if you can start to dig into some of, quote, the fundamentals of cryptocurrencies, that can help you when it becomes to your trading or investing selection process. Think of it as understanding the fundamentals behind a stock that you want to own. You may be a technical trader that trades trends on a weekly time frame, but if you also know, okay, this company's growing its earnings, it's got a great management team, and it's got great products coming out in the next year or two, that could give you some extra confidence or help narrow down your sort of investing universe. So hopefully that analogy sort of makes sense here, and we're going to kind of move away now from these definitions and some of the technology and science behind all of this, and start to move more into the good stuff, the trading and the investing, and how to get started and what to think about. So why would you want to invest in cryptocurrency? Okay, that's the first thing we're going to tackle. First, growth. It's a new emerging asset class with high potential to disrupt a number of traditional industries. There is a lot going on here. There is a flood of innovation and very clever and highly paid computer engineers, computer scientists working on these projects, and they are all hungry to sort of disrupt these legacy infrastructures that have been in place for tens or hundreds of years in some places. So growth is a very attractive sort of driver here for investment. Low competition. There's not many professional hedge funds in this space yet. Sophisticated investors, hedge funds, they're not really here yet. They're learning, they're educating themselves, and there's a lot of reasons behind that. Some of it, purely just due to lack of knowledge, others because of regulatory compliance issues, regulatory issues, market caps. Some of these currencies, Bitcoin, Ethereum, they have, in the tens of billions market cap at this point, at the time of this recording. But many of these other cryptocurrencies, they're in the millions or tens or hundreds of millions. And when you start to think about the universe of professional investors and the money that they sort of have at their allocation and at their disposal, these markets are still extremely young. But that is a positive or a benefit for you small retail guys out there. Me and you can go in there and allocate some money. And again, not saying there's no risk. We're going to talk about risks. There's plenty of risks. We're talking about sort of the upside at this point, the good stuff. But they're not there to sort of rain on our parade just yet. And diversification. As it stands right now, cryptocurrencies are very lowly correlated to basically anything else. There are some short periods where you see some correlation taking shape, but even to gold or some of these other asset classes that it gets often compared to, cryptocurrencies are fairly diversified, lowly correlated to other assets. That's a fairly attractive characteristic at this point. That could change as markets mature, as things change, but for now, that's certainly the case. So those are a few of the upside points of investing in cryptocurrencies. Markets feast on growth and price events far into the future. That's one thing we know. If we've learned anything from the stock market and how that operates, we're always looking 6 months to a year, 2 years down the pipeline, and basically trying to figure out what are the potential opportunities in this investment? That's what the market loves to see. And cryptocurrency, you know, the long term is really the big game right now, because as it stands right now, there's not a whole lot of real application going on in this space, but it's all down the road that the market is getting excited for. So the clear applications are not yet in front of our eyes, but we want to be paying attention right now because the market tends to do that, just, you know, tends to act in that same way. And we also want to start to train ourselves in that same mind frame, is that, you know, we may not have the full sort of Ethereum network built out so we can, you know, do all of this wonderful cloud computing and smart contracts with, you know, taking out the old gatekeepers of buying a house or going to the notary or whatever the use cases are. They're not here yet, but if that's what's coming, if that's what we think can happen, that's what the market's paying attention to. That's where we want to be thinking and having our investor hat on to say, okay, that's the potential behind this cryptocurrency, behind this return driver. So why trade cryptocurrencies? We talked about a little bit on the investment side, but let's talk about the trading aspects to it. First, I mean, everything we just talked about on the investment side, fairly applicable here on the trading side of things. But to get a little more specific, opportunity in terms of volatility and day-to-day price fluctuations. Now, this is absolutely a risk on the other side as well, but the moves in this space are tremendous, right? We've seen things go basically, you know, coins ICO or come to market trading at 10, 20 or under $1 and can run up to tens or hundreds of dollars, right? The returns on a percentage basis are thousands of percent, something that basically mirrors options contracts, and rarely are you going to find a stock that moves 10,000% or, you know, several thousand percent. So the opportunity in this space in terms of volatility and price fluctuations is something that, of course, any trader that is seasoned in his risk management process will certainly appreciate. Lack of professionals, we sort of touched on this before, but to get a little more specific, we really don't have any of those high-frequency traders or sophisticated algorithms in this space yet. I'm sure there are some. I'm sure there's plenty that are working and developing in this space, but we really don't have all of those very, very, you know, smart, time-tested, back-tested algorithms that have been running for years, really just kind of soaking up all those market inefficiencies. They don't exist yet, and again, this helps give us, the little guy, the retail trader, you and I, more of a sort of leg up in this type of environment. Finally, you know, again, tied to that point, most skilled traders should find an increased edge here. It just makes sense. There is a, you know, more of a lack of professionals in this market. So what are the risks of investing in altcoins? Now that we talked about kind of all the good stuff, right? We had a good, you know, a good amount of maybe excitement from those last two slides, talking about lack of professionals, good growth opportunities, lots of volatility, right? It's kind of checking all the boxes of a trader and investor of what they look for. But what are the risks? And there's a tremendous amount of risks, okay? So first is regulation. You know, it's very unclear at this point what kind of regulation is going to be enforced in this space. Right now, we have ICOs that are just coming to market basically every day, every week, and they are, you know, taking liquidity. They are taking retail traders' money. In the private VC space, you need to be an accredited investor, right? You can't just take the general public's money at all on these new sort of projects that are considered more risky and you know, so on and so forth. Don't want to go down that rabbit hole. But regulation, exchange regulation, tax regulation, you know, currency regulation and how we trade this and move amongst asset classes. There's just so much that's a big question mark right now, that in itself is a risk, right? Because if the government, if something happens here where exchanges, say, get highly regulated or cornered or frozen, then they own your private keys. Your funds can get frozen on those sites as regulation, all these laws or anything else starts to you know, really just cramp down on some of these bottleneck like third-party exchanges. So regulation, that's a big thing. Hackers, thieves, illegitimate actors. We've seen plenty of history here of exchanges going down, money getting stolen, fraudulent sites, scammers out there. There's a few articles we linked to back in the blog post, and then if you look in the description here to some past examples of multi-million-dollar sites going down here. It is still early days. You are the bank. Remember that. So we don't have that entity that's insuring all of our money, holding our passwords, and keeping our account safe. That is the risk in this type of environment. And because it's young, because people are learning the space, because of lack of education out there, there are a lot of these incidents happening. That's a risk in this space. You are your own bank. We basically just talked about that. Not mature markets. So something is recently, if you're watching this in fairly real time, GDAX, which is Coinbase's primary exchange there for Ethereum, Litecoin, and Bitcoin, really just had a very classic example here of a seller that allegedly the story is a seller comes to market with a multi-million-dollar sell order that basically soaks up all the liquidity on the order book and drops the price from 350 and change or wherever it was trading at the time down to $10, I believe. So we have and all in basically an instant. So basically we see price completely collapse and then until it ultimately recovers. But essentially everybody on margin gets margin called, and there's this nice fiasco there on that particular exchange. There's more examples, but the point is these aren't mature markets with very deep order books, and again, they don't have the professionals there providing liquidity and having all these wonderful algorithms in place that people often complain about, but it's that liquidity and things that are still missing from these still immature markets that make trading and investing in this space, particularly on margin or anything like that, an even higher risk. So finally, high probability that many of these cryptocurrencies never get mainstream adoption or a working network. So that's just the truth, right? Just like in markets, stocks fail, they go to zero, companies fail, they don't work out. In cryptocurrency, this is a brand new space, brand new teams, brand new technologies, highly competitive, unregulated. Like there is so much here that can decrease the odds of any of these things really catching wind and catching Main Street adoption and getting a working network like that. The distance from the start to the finish line of multiple years down the road with all of these hurdles in the way makes this even more uncertain. So again, the general sort of disclaimer here in traditional financial markets is don't invest with money you can't afford to lose. Don't invest or trade with money you can afford to lose. And cryptocurrency, you really should probably cut that number in half or in quarter because there's so many more risks in this space than traditional financial markets. So all of the things in traditional financial markets that make trading very difficult and uncertainty and all that stuff, that all exists here as well. But you really have all of these unique sort of risks that are posed at the cryptocurrency space. So again, when you're weighing the kind of pros and cons here, it's easy to get excited about, jumping into a new asset class here, all this great new technology, all these big promises, changing the world, disrupting industries. But again, you have to realize that there's tremendous amount of risk on the other side of the fence. There always is. If you're at an opportunity to make hundreds or thousands of % on a instrument for a long-term investment, there's got to be a substantial amount of risk on the other side. That doesn't come at just a free lunch. So that covers up some of the risks. Let's talk about where you can buy it. So if you're still on board here and you say, okay, I understand the risks, I understand the pros, got to be prudent with how much money we allocate to this. Where do we buy it? Where do we get started? How do we move into some of the trading and investing side of things? So first off, what country or state you're in could influence your choices. Yes, even your state in the United States. So if you are here in the United States, depending on where you are, that could actually impact things as well. I'm not going to go into all the, you can look those things up online, but just do a little homework on that before you start buying. The popular and easiest way for the United States residents to buy Bitcoin, Ethereum, Litecoin is Coinbase. Now, some of you may or may not like Coinbase. that's fine, but it's one of the easiest. It's been around for the longest. It's raised some of the most money. So it's one of the easiest and safest. And again, I use that very carefully because if you don't own your private keys, you have to be careful. It's still an exchange and it's still a place that could get regulated down or funds frozen. But Coinbase is one of the most reputable exchanges out there. They make it very easy. It's the equivalent of opening up a regular bank account, or probably even easier than that, probably like buying a coffee at Starbucks. It's pretty easy now at this point to buy cryptocurrency on Coinbase. Where else can you buy? Because there are plenty of alternatives. And again, like I say, it depends on where you are in the States. Maybe you want to make different decisions. Maybe you want the money faster. Maybe you want to pay a little less fees, because Coinbase does have a little bit pricey on their fees. Kraken, San Francisco-based, low fees. That's a good alternative. Bitstamp, so they're a London-based exchange. They've been around for a very long time and they do a good amount of volume. Local Bitcoins. So this is a peer-to-peer marketplace, and it's actually getting pretty popular, I believe, on the latest volume transactions here. But you can actually buy Bitcoin from someone else in a dark alley right next to you with cash and exchange cash for Bitcoins. It's pretty wild. I have not done it personally, but you can, and you don't have to do that locally, but you can do it online. You can do it locally. You can do it in cash. You can set an arrangement up online, but it's basically a peer-to-peer marketplace. They just take a percentage of all the transactions that are happening there. But that one's interesting because you don't have that complete exchange risk there. You're really dealing with other participants that are posting ads and looking to sell and buy cryptocurrency. So local Bitcoins, Bitstamp, Kraken. There are still plenty of others, but those are probably three kind of good balance there of some different alternatives besides Coinbase. When you're thinking about other exchanges, because like I say, there are others, there's a few things that you want to think about. Where is the exchange located? So make sure you can find an address. Make sure it's not, not just in the corner of the world, buried somewhere that, a place that nobody ever goes to or you've never heard of before, or you can't find on a map. Figure out where the exchange is located. Look up how long they've been in business. I think that's pretty important as well. The longer the time they've been in this space, the better the odds are, or the more reviews or complaints or issues you could potentially uncover there when you're doing some research. Do they have active support? I think this one's pretty interesting. Check Twitter. If they have an active Twitter handle, I think that's always a good sign because that's very front and visible. But also, if they don't have that, do they have a ticketing system? Do they have live chat on their site? What options do they have for support? What kind of volume do they transact? This is going to be a pretty good tell as well. In the description of the video here, we'll put a link to figuring out the volume of some of these exchanges. So the more volume they're doing, the more reputable they are just by nature of money transacting there. So that's something else important to take a look at. All four of these are pretty good vetting questions to ask yourself. If something seems too good to be true, if you're looking at a site and they're going to pay you some big sign-up bonus or match your deposit and they're located, somewhere in the middle of the jungle be careful. So just do some research. It's worth spending some time, especially if you're going to keep money there. It's definitely worth, there's definitely worth taking the time to research these other exchanges and, just be careful out there. So what exchanges to trade on? So notice it's slightly a little different here. I buy my cryptocurrency on different exchanges than I do my trading at. So I buy basically everything on Coinbase, and then I transfer that money to a different exchange when I want to do some trading. Now, you don't have to do it this way, but for me, so Coinbase has an exchange called GDAX, and they are very liquid if you want to trade Bitcoin, Litecoin, or Ethereum. But if you want to get after and trade some of the other hundreds of altcoins that are out there, you're going to have to go to a different exchange. Coinbase isn't going to do it right now. They, I think, have certainly hopes to get there and to keep adding new instruments, but for now, that's not the case. So my standard procedure is if I'll buy my Bitcoin, I'll exchange my US dollars to Bitcoin or Ethereum or whatever on Coinbase. Whatever I'm not investing, so I'll take that. If I want to invest it, then I'm going to park it. I'm going to push it to my to my cold storage solution, which we'll talk about later on. And anything I want to trade with, I'm going to bring it to an exchange. Now, let's talk about exchanges. First thing to consider when you're thinking about exchanges, just like where to buy cryptocurrency, securities number one. So have there been any major security holes or incidents in the past? Do they store customer coins in cold storage? Do they have IP restrictions you could put on for withdrawals? Do they offer two-factor authentication? These are all very kind of common questions you want to be getting, you know, yes answers to for security if you're going to start trading on exchanges, because if you're trading on exchanges, you're allowing them to hold your private keys. You don't technically own those funds at that point. I mean, you do, but if that site goes down, if the government comes down, if regulations come down, all those risks we talked about before, you know, it all sounds good on paper, but unless you actually have the power to get that money out and own those private keys, you have to be careful. So security, number one. Number two, reputation and support. You're seeing a theme here, but a lot of cryptocurrency at this time right now is just doing the due diligence to protect yourself, to make sure that you're protected and you're making smart choices of where you're buying cryptocurrency and where you're leaving your money at. So do they have moderators that are standing by to field questions? Do they have live chat? Do they have Twitter support, ticketing system? What is the reputation? What is the support? Do some research there on Google. Liquidity. So particularly for trading altcoins, liquidity is very important. There's not a whole lot of choices out there for high liquid opportunity for altcoins. So especially during periods of elevated volatility, when the market is moving very quickly, you know, liquidity is going to be very important in all of these considerations. And then trading tools. So back to basics here. This is pretty much the only thing you have to worry about in traditional financial markets, but it's kind of the last thing here. But trading tools and advanced order types. So things like stops, OCO orders, technical indicators. What do you need to trade? What do you like to trade? You know, as far as useful indicators or you know, different types of orders and that type of stuff. So all of that should be pretty clear, but very important to spend the time doing the due diligence on exchanges. The top U.S. exchanges here for U.S. residents, Poloniex, I put them basically number one, mostly because their liquidity, they still are best for liquidity. If you want to trade a large selection of altcoins and you have, you know, and you're just an active trader looking for that liquidity and selection, Poloniex is the way. Now, support is still a concern for me. I've done most of my trading through Poloniex. I've had sort of a horror story fairly recently with basically funds frozen, a withdrawal in process for over 20 days without ever getting a response back from them. Now, after it was day number 23 or 24, that ticket was resolved. I received my funds. Everything was handled fine, but I had to wait almost 3 weeks or 4 weeks with no response at all. So that's a pretty poor judgment there. So there's some skepticism there. I've talked to support. I've had other tickets in the past. They've handled everything appropriately ultimately, even though they might be slow at times. So there's still some caution there. I would definitely, I'm not hands down, getting behind them and recommending them very easily, because I know there are other people in that same situation where they're waiting for support. They haven't heard it, but I haven't heard of any major horror stories, plenty of complaints, but I haven't seen any big security breaches there or things that would really get me to pull everything. But again, keeping a small percentage of your funds there, I think that's always going to be key. It's almost like position sizing in the stock market. Position sizing is ultimately everything. If you're only keeping 10% of your cryptocurrency investments on the exchange trading, then you know what you're trading, you know what your max risk is basically. Bittrex here, number 2 in the middle. So What they lack for volume, they make up for in support. I haven't done a lot of trading here, but I've heard good things. I know some traders that are there, and they say the staff is helpful. They say the support is there. They have a decent amount of volume to choose from, and they have a decent selection of altcoins. Not as good as Poloniex, but something that is a good sort of alternative option. I believe they are US based as well, Vegas or Seattle or somewhere in there. It's tough to tell. Kraken, the last one there, volume's pretty high. I think it's about the second in exchange volume for the US, so it is impressive for volume. I've heard some pretty good things. I have no experience trading there, but I have heard some good things from other traders that are there, and I've seen some good reviews. So those three for trading and for staying active, for looking for opportunities, I think those are kind of the top three that I see out there. There are, again, still alternatives, but those are the top three that I see based on some of that selection criteria that we talked about earlier. So as a reminder, as we sort of alluded to a couple of times now, keeping funds on a third-party exchange, regardless of how good the security is extremely risky because you do not own the private keys. Kind of driving this point home, basically underscoring risk here on every single slide, because this space does deserve, understanding the potential downside there. Again, kind of reiterated this point again, but if the exchange is hacked or if it becomes fraudulent, regulation pressure, your funds can get frozen and you're stuck in limbo. So just, again, be very aware of that, position size accordingly. So keep the minimum amount possible. When you make some money, move profits off to a secure wallet. That's basically what I do. I just have, a number, and if I'm, as I start to exceed above that number, I just parse off some profits, put it into my cold storage solution, and then keep trading with the existing funds that I have on the exchange. So let's talk about some software, sites, and resources. So these are some things if you're going to get active in this space, if you want to keep up to date with some of the news and happenings. These are some recommendations. These are some favorites of mine. Again, in the description of this video, you can find direct links, or I think I'm putting together an article PDF that's going to contain all these. CoinMarketCap. So this is basically the go-to site for keeping up with crypto movement. So you can look up exchange volume. You can look up volume on individual coins. You can look at market cap. You can see the percentage movers. Very nice site. Very high traffic site at this point. I think a lot of people are using it as a nice resource, as it should be. So CoinMarketCap, I definitely would check out that site. Coinigy, so many people don't know of any trading software out there. Coinigy is my preferred trading software solution. Basically, it's a charting platform that uses TradingView charts. So if you're familiar with TradingView, it's going to use their charts, and basically you can connect via API to any of the exchanges that you choose. So Poloniex, Bittrex, whatever you choose, and you can trade directly on Coinigy and chart and kind of have an all-in-one sort of solution there. It's a paid product. They do have a free trial, but I like it. They do have, you can build watch lists and you can do some cool things with it. So check out Coinigy. I'll probably do another video on that at some point. TradingView. So for software charting, this is the best in class right now. There's not too many out there that are providing or aggregating all of this data for cryptocurrencies, but TradingView is one of them. So if you haven't checked them out, check them out. You can pull up Coinbase, you can pull up Poloniex, you can pull up Kraken, all of those different exchanges. You can get those feeds into TradingView, and then you can chart those just as you're used to any financial instrument. CoinCap, so this is an iPhone Android app. It basically is just like CoinMarketCap. I think it's different developers, but basically you can track all of the different crypto movements on your phone. You can also maintain your portfolio, so you can kind of update how many coins you own of certain cryptocurrencies, and then you can just track it, see the percentage moves and day-to-day fluctuations. Changely, so here is a very convenient way to exchange from one cryptocurrency to another without ever needing to create an account or deposit money on an exchange. So it's a really cool site where you can basically say if you own Bitcoin and let's say you want to own Litecoin, you can go to Changely, you can deposit your 1 Bitcoin or whatever your amount is that you want to exchange to Litecoin. So you can deposit And when I say deposit, it's really just send them whatever amount of Bitcoin you want, and then choose the receiving address for that Litecoin, and they'll do the transaction for you, and it'll basically just spit right back out to you the Litecoin that you ordered. So you don't have to create an account, you don't have to sit it on an exchange, you can actually just pipe it right through and receive your new currency that you're asking for. So really cool one is Change there. Definitely recommend checking that one out as well. So where to securely store your cryptocurrency investments. This is kind of be wrapping up towards the end of this presentation, but this is a very important point here. If you're going to be holding cryptocurrencies for the long term, you don't want to keep it on exchanges. You want to own those private keys. So the best way to do that is to adopt a cold storage solution. And basically that just means your private keys and password are stored offline and not connected or accessible to the internet. So basically you want to have your private keys. You don't want to have it written in a text file on your computer. You don't want to have it saved to your Google Drive account or in your Gmail account, because that's all potentially accessible by hackers or any other sort of bad actors there. You really want to get those keys offline, not accessible to the internet. Their most popular way to do this is create a paper wallet, and there's a link to in the description here of the video where I put a link to a site where you can generate paper wallets for lots of different cryptocurrencies, but that basically gets those keys offline, keeps you in control with a physical paper. Also, you could create your own USB drive, so you can do kind of like an air-gapped, generate your own USB drive off a new computer or something like that. There's instructions to do that online if you Google it. Or you can purchase a hardware wallet. This is really the way I went. I bought one of these a long time ago, and basically it is keeping your private keys in a fully sort of password protected little USB drive where you can enter in your password, and it protects against malware, and you can easily access it. So you can still plug it into your computer and view your balance, do your transactions, sign your transactions. So it's a pretty neat device. You can head to the Trezor or the Ledger site if you are interested in that. They do support, I think the Ledger at this point is supporting more altcoins than Trezor is at this point, but they're basically equally as secure and gets the job done in either situation. But if you're holding coins for the long run, if you're not trading actively and you want to sit on something as an investment, or even if you want to dabble in the space and be opportunistic in it, I highly recommend one of these solutions for keeping your cryptocurrency on one of those solutions. So wrapping things up, final considerations. The market cap of all coins has gone from about $15 billion at the start of 2017 to over $100 billion just 6 months later. So we've seen, basically a 7x in this space in a very short period of time. So again, that can get you excited to show you sort of the opportunity in this space, but it should also speak to the risks in this space and how frothy and how much hot money is kind of coming into this market recently. It's probably not the best idea to run out and drop all of your savings in this right now, but again, it also kind of just speaks to the ebbs and flows. This type of magnitude move over such a short time period, 6 months, is again both significant risk and opportunity. So it's good to be aware of kind of what's going on here, and that was of course the hope for this video, is to kind of gear you up and define some terms, talk about why you may or may not want to get involved in this space, and then kind of show you some of the solutions and sites and resources to get there. So hopefully this has been helpful for you guys. I look to do some more of these videos. If you have specific questions, please feel free to reach out in the comments section of the article or on the YouTube video, and check out, again, those links and resources I have in the description. I'm going to put out a PDF kind of containing all of the links here that we talked about. Not quite as clear to see all the links in this slide deck format, but I'll have everything in there to the exchange. If you want to go onto Coinbase, you want to receive $10 free. I have a couple of referral links for some of these things we talked about, all things that I use, but some things you can get discounts on yourself if you want to try some of that out. And once again, hopefully you guys learned something. Thanks so much for watching. If you do want to get a hold of me, again, traderisk.com, you can head there, fill out the contact form. You can reach me directly, or again, leave a comment and I'll get back to you as soon as possible. So thanks again, guys. Good luck out there, and talk to you again soon.